The Federal Reserve is holding interest rates steady with uncertainty about the state of the economy and stubborn inflation. President Trump has been pushing for cuts, but the global financial impact of the Iran war is now a concern for the Fed. Bradley Blackburn has the impact.
Fed Chairman Jerome Powell stepped in front of cameras Wednesday and said what many expected.
Today, the FOMC decided to leave our policy rate unchanged.
The Federal Reserve is keeping its benchmark interest rate steady at a range of 3.5 to 3.75% as policymakers point to concerns over inflation and slowing employment, as well as the war with Iran and rippling economic effects.
The implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy.
The pinch on oil supplies is sending gas prices skyrocketing, and there is no relief in sight for home buyers who need a mortgage.
Mortgages have spiked up above 6.3. We saw as high as 6.41 last Friday. That's hurting borrowers in a big way. And I think it's demotivating for many people who want to be buying.
President Trump has pushed for more interest rate cuts, but Fed watchers say the central bank is focused on the data to prevent the stagflation the country saw in the 70s with stalled economic growth, high inflation, and high unemployment.
If the labor market were to deteriorate significantly, they'll cut rates again. But if we see inflation remain above the Fed's target, they may not do anything.
Ahead of Wednesday's Fed decision, President Trump posted on social media, "When is too late Powell lowering interest rates?" Powell is set to be replaced as chair when his term ends in May. He will lead the Fed board's next meeting in April. Bradley Blackburn, CBS News, New York.